Good afternoon, ladies and gentlemen, and welcome to the Hummingbird Resources PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it's appropriate to do so. Before we begin, as usual, we would just like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to CEO Dan Betts. Dan, good afternoon, sir.
Good afternoon. Thank you. And thank you everyone for dialing in for our Q2 operational and trading update. I will go through the results and I will go through them relatively quickly, and then we will open the floor to any questions that you have, and we're available for as long as it takes to hopefully put some colour on the situation in terms of the quarter and also looking forward to the second half of this year. So you've got myself, Chief Executive of Hummingbird Resources, and also Ed Montgomery on the call, who's in charge of corporate development. Apologies from Tom Hill, the Finance Director, who's on the aeroplane on the way back from Carusa as we speak, so he couldn't make the call today. So to jump straight into it, Q2 this year was disappointing across both mines. We produced 19,855 ounces of gold during the quarter at an AISC of $2,598 an ounce. At Yanfolila, the mine grade was 2.08 grams a tonne, which was down from 2.47 in Q1, and we produced 12,065 ounces of gold, down from 16,999 ounces in Q1. That resulted in sales of $25.8 million and a group EBIT loss of $13.5 million for the quarter. At Carusa, we produced 7,789 ounces of gold, largely affected by slow ramp up of the mining fleet at Carusa, which we can talk about at length later on. Going forward, the guidance for the year is 115 to 145,000 ounces of gold at an AISC of around $1,500 an ounce. You can see from the darker dots on this presentation that we're anticipating a significantly stronger second half of the year, both in terms of ounces produced and cost going forward. Guidance for Yanfolila is 65 to 75,000 ounces of gold for the year at an AISC of $1,600, and guidance for Carusa is in the 50 to 75,000 ounce range, which is a wide range considering there's only half the year left, but it depends a lot on the effectiveness of the ramp up over the coming couple of months. The AISC at Carusa there is $1,400 an ounce, but it's worth pointing out that we fully anticipate being at a run rate of circa 120,000 ounces a year at Carusa by the end of the year, with an AISC closer to $1,000 an ounce on an annualized basis. To give you a bit more detail about the performance, at Yanfolila, 12,000 ounces of gold poured with 1.5 million BCMs mined, 167,000 BCMs of ore, and an average mine grade of 2.8 grams a tonne. Ore processed 331,000 tonnes, and the average mill feed grade of 1.31. Obviously, the reduction in grade is the key reason for lower production at Yanfolila, which is driven by the fact that we had to process a lot more of our low-grade stockpiles than we had anticipated, which was driven by lower availability and utilization of the mining fleet, meaning we were behind on face positions in the pit. So we were not accessing as much ore from the pit that was of a grade that we wanted to feed the plant, so we had to blend with lower grade stockpiles. Plant continues to operate very well, even at those lower grades. The recoveries are at nameplate or above at 92.6%. So Yanfolila was a difficult quarter, and it was driven largely by a difficult operating environment with our mining fleet, with lower availability and lower utilization of equipment. We have invested a lot in that equipment during the quarter, and we anticipate those volumes picking up. It should also be noted, and it's a significant fact, that a lot of the effort in Q2 was placed on opening up the Gonka pit. So the strip for the first half of the year at Yanfolila is very high, I think 18 to 1. and that will drop significantly, by 50% in the second half of the year, as we have now got access to that ore. A lot of the ore mined was also put straight onto low-grade stockpiles, so that will have a negative impact on the costs. Obviously, you're wearing all the costs to put it on the stockpiles. So it was an expensive quarter with low gold production, but I think the key point is it is in the past, and we are looking for a much stronger second half. Yanfolila was always anticipated to be a second half weighted year, and that remains the case. At Kouroussa, we poured 7,789 ounces of gold. We mined 1.2 million BCMs during the quarter. I think it's probably worth highlighting we did nearly 800,000 BCMs in July alone. So since we have resumed work with Corica at site, the mining volumes and productivity has picked up immeasurably, as has the relationship. And obviously, we'll go into a lot of detail on that specific area in the Q&A. But I think the point is we are largely through the depleted oxide zone. We are now accessing the fresh rock that has much higher grade, which is obviously what Kouroussa is all about, with a reserve grade of over 4 grams a ton. You can see that the average mine grade has picked up considerably Q1 to Q2, and it's continuing to do so now. The mill feed grade is obviously a result of blending low-grade stocks, an oxide material with very little gold in as we've been commissioning the plant. So I think Kouroussa is well positioned for a dramatic turnaround imminently as we get the high-grade ore and the volumes through the plant. The bottom point there is the outlook for production continues to improve, but commercial production is anticipated in late Q3. And as I said earlier, by Q4, we should really be at a run rate of circa 120,000 ounces a year and an AISC closer to $1,000 an ounce at Kouroussa. This is a little cross-section that I thought would be useful to visually illustrate the situation at Kouroussa. The yellow blocks there are sort of high grade north of 3.5 grams a ton. And you can see that we have now mined through the lower grade portions of the pit and the depleted portions of the pit where the artisanal miners got into the oxide material. So as we get lower into the fresh rock, we're accessing more and more of this high grade material, and that will become consistent going forward. We have continued to maintain a very strong focus on all our ESG initiatives across both mines, and I think probably essential to highlight that during a difficult quarter where we've enjoyed strong relationships at every level of the community at both mines. So that's been a big benefit, and we're proud of that ongoing engagement at every level that Hummingbird puts a big priority on across its business. In terms of financial summary, 12,457 ounces of gold sold during the quarter at an average gold price of $2,075 an ounce. That's driven slightly lower than the spot price because of some of the hedging commitments we had in at the start of the year to lock in the gold price when it went above $2,000. Those hedges are coming off and will come off rapidly during H2 of the year, and we should have a exposure to spot price on the vast majority of our gold production. The AISC on gold sold at 2,598 is obviously an ugly number, but I would point out that it's driven almost entirely by lack of ounces, and we expect that to change rapidly at both mines. The costs across the business were largely in line with expectations. So in terms of the management of costs and cost control, things have been going well. It's just getting the right material through the plant at the right time. So group adjusted EBITDA of minus 13.5 million for the quarter. Net debt has increased slightly to $153 million. And during the quarter, we also issued 6 million shares to Wacom, who are our main construction partner for the Kouroussa project. This was a contractual component of their contract for building the Kouroussa plant. And Nico Resources is CIG Group, our strategic shareholder, who maintain their position with that share issuance. So that's what those two bullet points are there. So obviously these numbers cause questions about Hummingbird's liquidity and balance sheet strength, and I think it's important at this point to stress that we continue to have a strong, supportive, collaborative and dynamic relationship with Coris Bank, and we have been discussing restructuring and refinancing some of the short-term debt, which I'm sure in the coming days we will be able to put some more detail and colour to the market on that, to give people the concrete comfort they need that Hummingbird has that space and liquidity. And obviously we've been evaluating other options. I mean, when the mining at Kouroussa stopped in Q2 and we didn't know how long it would be down for and exactly when we'd be able to ramp back up with Corica, we obviously examined all sorts of options that are available to us, and we've been focusing on, you know, non-equity dilutive solutions. We haven't taken any of those up, but I think that we have advanced discussions with a number of potential avenues should the need arise, and I'm entirely comfortable, particularly with the H2 production profile and the gold price where it is, that Hummingbird can deleverage extremely quickly from where it is now. A little slide here on the forgotten Duby project in Liberia, which at 2,400 gold has an NPV of almost $1.5 billion. We continue to work on metallurgical recovery rates, CapEx projects, and ways to reduce the power for that project. And we continue to talk to a number of parties interested in financing or partnering us potentially to build that project. And I know that it's a story that I would love to give a concrete conclusion on to the market about how we plan to get this mine developed. But I think at this gold price, it becomes an extremely valuable and proposition for a number of people. And I think hopefully something will develop in that space soon. So looking forward, our plan is to end this year at a run rate of 200,000 ounces a year. It's been slower than we thought because of challenges in the quarter that we're announcing, but it's important to stress, you know, we are operating at full strength now across both mines, and both mines are set up to access higher grade ore and have a good run into the second half of the year. This slide is a summary of what I just explained about the group NPV, but I mean, obviously at these higher gold prices, the NPV of Yanfolila, Kouroussa, and our 50% share in Duby, even net of debt at the bank, has a $614 million NPV. So trading wise, obviously we're trading at sort of 0.1 of NPV, which, you know, I understand the reasons. It's all about liquidity and improving cash flow to pay down the debt and strengthen the balance sheet. But I think it's almost an asymmetric trade now, where if Hummingbird delivers, it's got an extremely attractive and immediate future. So I'll just end with this slide, just saying, you know, that we are a multi-asset gold producer. It's been a challenge to get Kouroussa up and running and to deliver across both mines, but they are operating at full speed. We have almost 10 million ounces of resources and reserves. We have a strong strategic partnership with Coris Bank and CIG Group, who have shown immense patience and support during this period. And I am confident that together we can go forward and go from here to build a very strong West African gold mining company. Thank you very much.
Perfect. Dan, if I may just jump back in there, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions that were submitted already, I would just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboard. Monty, at this point, sir, if I may hand over to you to chair the Q&A with Dan, and if I pick up from you at the end, that would be great. Thank you.
Yep, understood. Well, thank you for the questions. We'd had several questions that have come in to us post the release this morning. We try to break them down into each of the asset, Yanfolila, Kouroussa, Pasofino, and the balance sheet. So I'll run through them in that order as they come through. Got a few live, but hopefully the questions that we've got can answer your, we can push them into answering what you have here. So I'll just start with Yang mainly Dan, you can throw them to you and I can chime in as well. At Yang your quarter BCM movement and gold ore mine were similar to last quarter, yet your average mine grade and your average mine feed grade reduced from the previous quarter. Can you provide a bit of an explanation of this?
Yeah, sure. So let's start with the plant and the mill feed grade, because it's not a direct correlation to what we mined. It's obviously you blend different stockpiles to feed the plant, and we, as a result of not accessing and producing the higher grade material from the mine that we wanted, we ended up blending our feedstock with lower grade stockpiles. So we had more lower grade feedstock in the feed during the quarter than we had hoped. So that's why the mill feed grade was lower. The mine grade was lower because we were spending a lot of time stripping at Gonka, and we were not into the meat of Sanamali East. We are now into the guts of Sanamali East, which is a much better understood higher grade deposit, and accessing higher grades there. But I think, we struggled during the quarter to move the volumes we needed to move to meet the face positions at Yanfolila, and that was largely a result of poor equipment availability and utilization. So I think that's the answer to the question, Monty. And
Yep.
We have addressed those, and we continue to address those with both internally and with our contractors.
Yeah, and I think on the presentation you talked about the strip ratio falling quite materially as well. So which factors into that?
Yeah, so that certainly factors into the cost. The strip of 18-1 is very, very high, and that's where a lot of the cost in the quarter went.
So just on Yankford, sticking with that, from you got a question about you got a 30,000 ounce production for the first half 2024, and for the full year guidance of 65 to 75,000 ounces requires a turnaround for the second half, averaging circa 20,000 ounces per quarter to meet the mid-range. How is Q2 going right now? What are your target exit rate expectations by the end of this quarter moving into Q4?
Well, the two main feedstocks from here for the rest of the year are Sanamali East and Gonka, both of which have higher grades than what we were mining in H2. Plus, we don't have the strip requirements to access that ore that we had at Gonka. So we are expecting to mine a higher grade and have a greater amount of tons to blend into the feedstock and have a higher mill feed grade. So as a result, I'm anticipating seeing much stronger production for the second half of the year.
Understand. So sticking with Yanfolila, you talked about in the presentation, the release, about what is being done to increase equipment availability and short-term initiatives per the release this morning to improve overall production efficiencies.
So that's really about the mining fleet, and we've got extra equipment on site from other contractors. We have Corica at Yanfolila, we have RMS at Yanfolila, we have Atassi at Yanfolila, and other fleet as well. So we've bought in extra fleet. We've spent money, and contractors have spent money on the maintenance of their equipment to make sure that the availability is higher. And that's that. And we brought in actually more senior management to manage both the fleet and the relationships across the contract management. So that's really the answer to the question, Monty. Yeah, we need the diggers and the trucks to be working.
Just moving to the underground at Yanfolila, how far are you away from reaching development ore, and when do you expect to achieve underground ore feed to the mill?
So, well, there's a couple of bits to this. So I think we are 900 meters is where we access ore in the underground. Yep. I think at the moment we're about 800 or 780 meters, 800 meters into the development, and we're developing at a rate of 3 to 5 meters a day. So in a perfect world, we will be accessing the first phases of ore this quarter, even certainly during Q4, and setting us up for 2025. the reality is, we have been stretched and we have had to really cut our cloth in Q2. Things have been difficult and we haven't been able to do everything at full speed. So the development of the underground in terms of, some of the equipment needed to develop at the rate we want has had to be pushed back. So there will probably be a slight knock-on effect from that. But it's going well. It's going well. The development rates have been good, and I think it's looking good.
Yeah, and it's close. So we'll provide more update on that in Q3. There's a question about just operating costs at Yangfilila have increased from the sort of Q4 2023 levels to roughly sort of 31 million. Any explanation about that increase?
Yes, so I mean, a lot of high strip, a lot of material moved that didn't generate, and a lot of that went onto stockpiles. So there's a big cost attached to that. I mean, there's been increased costs. It's particularly in fuel in Mali. That's been a big cost. We have continued to invest in infrastructure and in the underground and in the maintenance on the fleet. So there has been a lot of cost, obviously not offset by the production we'd hoped for. So yeah, those are the main items.
Moving to Kouroussa, I've got probably two questions here, but I'll combine them into one in terms of your outlook for Kouroussa. Obviously, again, expecting a bigger second half from Kouroussa versus the just under sort of 14,000 ounces for the first half. Can you give an update about how you sort of see that for Q3, Q4? And also, can you give your sort of expectations about the average mill grade feed for the second half?
So sorry, Monty, the question was, what do I anticipate H2?
Well, for production for the second half, your sort of expectation for Q3, Q4 for production at Kouroussa to get to that 70,000 ounce guidance range, and your expectations of sort of the average mill grade feed.
Well, so the guidance range is obviously my expectation. So, we've produced, I think, 14,000 ounces so far from Kouroussa, and we're saying 50 to 70 for the year. So, I really anticipate a material increase in ounces immediately from Kouroussa, and I see it getting stronger as the months go on towards the end of the year.
Understood. And I suppose you've answered about the mill grade feed in terms of that increasing materially going forward being the key driver.
Yeah, I mean, one thing to talk about on Kouroussa there is obviously the fresh rock circuit was commissioned in Q2. That's working well. The plant continues to work very well. Very happy with the recoveries and the performance of the plant. The ultimate grade of the feed will be limited by how much fresh rock we put through the plant, because it's the fresh rock ore body that carries the grade. And it was always anticipated that we would put a thickener in about month 18. So we're in the process of designing and finalizing that thickener now. Until that thickener's in, you're probably going to max out at about 60-65% fresh rock throughput at the plant, and the rest will be blended with oxide material. But I also think the oxide material grade itself will pick up, because where the mine was commissioned in the middle of pit 4 with the highest grade material, that was the bit that was the focus of the artisanal miners. So they'd stripped a lot of that out, and as we move to other oxide material, we're seeing more gold in that material.
There's several questions about Corica. Maybe combine them. Maybe you can give a bit more detailed performance about how how Corica is performing, what improvements they have made from their side, also from our side, in terms of the historical disputes, and anything you can add about the disputes and the way forward with Corica.
Yeah. Okay. So, obviously it was a very awkward situation in Q2 that resulted in a bit of a hiatus with Corica leaving site. And that meant we had almost 2 months with no productivity, or very little productivity. Etasi continued to operate throughout that period, and we continued to produce some gold. But the nub of the dispute with Corica was that we felt that they were materially behind contract, and they felt that we were materially behind on payments. And it reached a point where that it reached a point where they downed tools and walked off site. I think, that's old news. That was March the 17th, and it was extremely difficult. And these results are largely a result of that situation. But since then, I'm pleasantly surprised. I'm actually, the relationship is extremely constructive. Both parties have come back to the table. Both parties have made significant changes in terms of the management that was entrenched in their views. So we've got new management who are committed to working together. Both parties can now see that the only way to resolve this is to access high-grade ore and for Kouroussa to become the money machine it should be. And that can happen very, very quickly. And as soon as we start producing 10, 12, 13,000 ounces of gold a month, particularly at 2,400 gold, you're going to generate an awful lot of money, and you can resolve an awful lot of issues and disputes. So I think Corica came back to work. They commissioned the fourth fleet that hadn't been operating till then. They've brought on stronger management. We have made the same commitment and changes. We are working collaboratively together. They committed to a volume of material since coming back to work, and largely meeting those volumes. So I think everything is in a much, much, much better place than it was. I mean, obviously a lot of damage was done, and we've still got to work through that, and hence why the balance sheet is so stretched, and why we're in the position we're in. But I think all, that's a long answer, but I think we're in good shape.
Understood. And just you have expectations that you'll meet commercial production at Kouroussa by the end of the quarter. Can you give a explanation about what commercial production means?
Well, so to me, and I defer to industry experts, but to me, commercial production is when you are operating at nameplate in a steady state for probably 3 months. And I think that means your mining rates, your recovery rates, your throughput rates across the mine and the plant. And yeah, I anticipate us being at commercial production at the end of Q3 and certainly into Q4, certainly ending the year at that over 200,000 ounce run rate for the company and over 120 circa for Kouroussa.
Understood. Can you elaborate a bit more about the incident at Kouroussa and the steps taken post this incident since then?
Sorry, Monty. I assume you're talking about the fatality.
Yeah.
Yeah. Okay. Well, I mean, it was an extremely unfortunate situation and something that we take extremely seriously. We have been extremely proud of Kouroussa's safety record. I mean, 2.5 million LTI free hours, and then unfortunately I think it was post balance sheet, but at the end of Q2, we had a fatality in the mine with an employee who found himself in the wrong place and got killed by an excavator. And I think, there's been a systematic, detailed investigation by the local authorities, the police, by Hummingbird. It's been taken extremely seriously. And whilst the outcome of that inquiry is that it was a tragic accident, and procedures were not followed, I think that we all in the mining industry need to sit down and go, well, the procedures weren't good enough. And how do we change the procedures so these accidents cannot happen? People will always make mistakes, and accidents will always happen. But every time they do, you have to look at the guide rails and the framework that is in place and how that was possible and how you can prevent it going forward. So, yeah, there's been a lot of soul searching and learning on that one, and I think hopefully it's impossible for that to happen again.
Now moving a bit to the balance sheet, you had limited cash at the end of the quarter, sort of 0.5 million, but you talk about refinancing with Chorus, which you talked about in the release, which is relatively imminent, and the potential for exploring other non-equity financing options? I think you've talked about that in the release, but anything further you wanted to note on that?
Well, I guess the main one is Coris Bank and our loans and how we plan on servicing those loans. And we have daily conversations with Coris Bank across the board, and we continue to have a very collaborative and supportive approach to the challenges that we face as a business. And they've been, extremely flexible and supportive in their approach to this. And whilst I haven't got a document signed, and if I did, I'd have announced it to the market. We have, I'm extremely confident that those loans and our relationship with Coris will continue to be positive, and it will allow the flexibility that's needed to get through this period. I mean, what we talked about in terms of non-equity initiatives was really just in the case that we need further equity or liquidity to strengthen the balance sheet and help pay down some of our creditors and give us a bit more flexibility. We have examined, I think is the right word, and had conversations with a number of people about different initiatives, off-takes, asset-backed financings, all sorts of things, as you can imagine. And I mean, as you know, I'm not in a position to say things that are not in the public domain and are not fixed. But at the same time, I'm confident that if we needed to access that capital, we would be in a position to do so.
Okay. I mean, continuing with cash flows, what are your expectations for the free cash flows by year end and into 2025? Obviously, on the back of strong production forecasts for this second half and into 2025.
Well, I mean, I anticipate being over 200,000 ounce a year producer with the AISC coming down, and I anticipate positive cash flows from Q3, and certainly strongly cash flow positive in Q4. And our focus will be on deleveraging the balance sheet and paying down debt as quickly as possible.
There's a question about when do you expect to be a 200,000 ounce producer? I think we've answered that, with Q4 in particular for Carusa getting to that sort of 120,000 ounce production profile. So I think that's sort of Q4. We expect to be a 200,000 ounce type producer moving into 2025. But maybe talking about Pasofino, I know you talked about that in the release, but can you give any more update on the asset or sort of expectations on moving into development type scenarios?
Yeah, sorry, excuse me. So the work ongoing is with DRAs across optimizing the feasibility study, particularly metallurgical recovery, because it's a big ore body and there was a small component of that ore body that had quite low recoveries, I think from memory about 87 or 88%. And that was not indicative of the whole ore body, but that number was extrapolated across the whole feasibility study. And we believe that there is an obvious solution there, where if there's a small part of the ore body that has low recoveries, you stockpile it and come back to it later, and actually the recoveries will be much higher as a business, which would obviously make a material difference to the economics. The other area we're looking at is power, both with an eye to the modern world we live in and how you can reduce your carbon footprint and add as renewable component as possible to how we power the mine, but also to the cost. And the feasibility study was imagining a power plant that I think was using LNG, that I think is quite impractical. And I think there are more practical and cost-effective solutions that are being run by DRA at the moment. So that work's ongoing. There was also a drill campaign at a nearby prospect called Bogangida, which has recently finished. And I'm sure Pasofino will have something to say about those results soon. The idea of that was to, it was exploration drilling, not resource drilling. But the idea was to show the district scale of that project and try to re-excite the mining community about what we have there, which is an unrivaled prospectivity. I mean, it's a 4 million ounce reserve, I think, 4 million ounce resource with a 3 million ounce reserve and a huge prospectivity to grow significantly. So those work streams are ongoing, and in terms of how we bring the project to production, Monty, I think, ultimately Hummingbird doesn't have the balance sheet. Clearly, we're going to need a partner or financing in some way. But we've had a lot more interest and conversations along those lines this year, not surprisingly, since the gold price has gone up.
A question about what are your expectations and news flow going forward for the second half? Maybe I can answer that. I suppose imminently in the refinancing with Chorus would be one. Potential more updates on the Commander East Underground and operations at Yangfulila for the second half. Obviously, we've got our Q3 out end of October. Have our interims also probably on Pasofino. As Dan said, probably more updates from Pasofino going forward. Got a question sort of on I suppose hedging. We had the gold price received was lower than the spot price this quarter by some margin, but you articulate that we still have hedging, but obviously as the ramp up in production happens for the second half, that will be materially we'll start to increasingly get the spot price. Anything further you want to comment about hedging expectations?
Yeah, so this is really one for Tom in detail, but so I'd rather people didn't quote me on these numbers, but I think we have 40,000 ounces hedged over the next 3 quarters that we're delivering into. So a small portion of our anticipated production over the next 3 quarters, meaning the balance is obviously at spot. And I think the price on those ounces that are hedged ranges from just over 2,000 to 2,100. Yeah. And obviously the reason for locking in that hedge at the start of the year was, the gold price had an amazing run, but when it went over 2,000 for the first time and we were looking at the debt profile and the repayments necessary going forward, it seemed, and I still believe is, the prudent thing to do when you got such a debt burden.
I mean, we just got a question maybe on sort of your expectations of lifespan for Carusa. We have noted that we expect to get to the 1 million ounce reserve profile. I mean, anything further, I suppose, on mining, or you want to articulate about Carusa and the lifespan of the asset?
I'm not really sure I understand the question, Monty. Sorry.
We just said, what are your expectations of the lifespan at Carusa?
Okay. Well, my expectations are that it will extend significantly. I mean, it's a massively enriched gold body, ore body, and there's huge exploration potential. Unfortunately, we have not had the bandwidth to commit to that exploration in the last 3 to 6 months that we would have liked. But when we sit down as a board and we talk about it, it's a priority. I mean, it's absolutely a priority to drill and expand that resource base, because there is tremendous potential there. And not only is it super high grade, but it's prolific. And you look at all the other discoveries going on in the region, and we have a producing mine now. So all we need to do is add mine life, and the value creation should be exponential.
Understood. I think that's the bulk of the questions. Hopefully we've answered the most of them there for you. I'll hand it back to the moderator.
Perfect. Dan, Monty, if I may just jump back in there, thank you very much indeed for addressing all of those questions that came in from investors. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Dan, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Well, look, my closing comment really is it's been whilst March 17th, we announced the hiatus at Carusa and the lack of the cessation of mining. I guess a lot of these numbers were inevitable, and it's unpalatable and it's difficult to see them, and it's been a very challenging quarter. But I guess my overriding message is it's in the past, it's history. We have got through that period. We are working well with Corica. Both mines are positioned to access high grade ore for a much stronger H2. The gold price is high. there's a lot of things in our favor, and in a very short period of time, Hummingbird can deleverage extremely quickly, and things can change very rapidly. So I think, yeah, it's been a challenging period, and hopefully we are at the end of it, and there's a very immediate and quick deleveraging and turnaround from here.
Perfect, Dan. That's great. And thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Hummingbird Resources PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thanks.
Thank you.